Hey everyone, Emily here. Today, we're talking about a stock that's riding the edge between AI brilliance and financial madness. Aurora Innovation, ticker AUR, is building self-driving trucks they claim will reshape the $987 billion US trucking industry. But here's the catch. Their revenue is barely over $1 million, and yet, the company's worth nearly $10 billion. So, what's going on here? Let's unpack the story behind one of Wall Street's boldest bets. Aurora was founded in 2017 by Chris Urmson, one of the original engineers from Google's self-driving project. The company's main product is the Aurora Driver, a combination of hardware, sensors, and software that can control freight trucks without a human behind the wheel. Their big promise? Safer roads, lower costs, and 24-hour delivery efficiency. It sounds incredible, but as we'll see, reality is still catching up. What keeps investors excited is Aurora's ecosystem. They've partnered with NVIDIA for computing and Continental AG for large-scale manufacturing. They're testing driverless routes across Texas and even expanding to nighttime operations. In theory, that's the final step before full commercial deployment. And when that news broke, the stock jumped 35%. So yes, there's real excitement. But let's talk numbers. Here's the not-so-fun part. Aurora made about $1 million in revenue over the past year, but it lost over $800 million. Operating income, negative $836 million. Free cash flow, also deep in the red. That's like burning a mountain of cash for a flicker of sales. To be fair, that's normal in early-stage tech, but investors need to realize this company could need years and more capital raises before seeing profitability. Right now, AUR trades around $5 per share, giving it a market cap close to $10 billion. Analysts, though, have some bold predictions. Average price target sits around $10 to $11, suggesting a possible 100% upside. But keep in mind, that's if things go right. And when your PE ratio doesn't exist and your PS ratio is in the thousands, you're basically betting on the future, not the fundamentals. So, what's actually working in Aurora's favor? First off, the market is huge. We're talking about a $1 trillion US trucking industry that literally keeps the economy moving. And Aurora wants a piece of that. Then there's the tech side. NVIDIA and Continental aren't just any partners. They bring credibility, hardware power, and manufacturing scale. Financially, Aurora's doing something rare for a young tech company. They've kept their debt low, which buys them precious time to keep building. And maybe most importantly, they're already testing fully driverless routes in Texas. That puts them among the very few companies actually close to real commercial deployment. In other words, they might just have a genuine first-mover advantage. But let's flip the coin, because there's plenty to worry about here. Aurora's revenue is basically non-existent. They're burning hundreds of millions every year just to stay in the race. And even if the technology works, there's a whole other roadblock: regulation and public trust. Let's be honest, not everyone's ready to share the highway with an 80,000-pound truck driving itself at night. So unless Aurora can prove this is safe, reliable, and scalable, soon, investor patience might run out long before the profits roll in. Right now, Aurora's story feels like it's 90% potential and only about 10% performance. The bulls are calling it the next Tesla of trucking. They see a massive future once the tech goes mainstream. The bears? They say it's just another overhyped SPAC running on empty. Honestly, the truth sits somewhere in the middle. If Aurora can actually bring its self-driving platform to market and prove it works at scale, we could be looking at a multi-billion-dollar shift in the logistics world. But if the execution slips, even a little, this $5 stock could roll backward just as fast as it climbed. So what's my take? Aurora is a speculative bet, not a stable investment. It's a play for those who believe in the autonomous future and can stomach volatility. For everyone else, it's probably wiser to watch from the sidelines until the company shows meaningful revenue traction. If you enjoyed this breakdown, don't forget to like, subscribe, and share. And let me know in the comments, do you think self-driving trucks will dominate highways by 2030, or will regulation stop them cold? This is Emily Carter. Thanks for watching US Stock Stories, and I'll see you in the next one.